Let's go over what has happened this past week and what are we expecting in the following week, which is pretty much the end of this month. And as we have come close to the end of the first month of this new quarter. So let's start off with the data points that we have seen so far this past week. It was quite a slow week when it comes to economic data until about second half of the week here. So starting from Wednesday and onwards. So beginning of the week, as you can see, we had a couple of orange folders, mostly yellow folders, and then you had Governor Bailey speaking on Tuesday. And then let's continue down onto when things start to pick up a bit more. So things start to pick up with Canada's interest rates coming out with a 50 points basis cut right here. And then continuing down onto the US side, we had existing home sales starting to drop down here a little bit, but pretty much sitting in the same ballpark area as the previous and the forecasted numbers. Then we had also IMF meetings this week. We also had BRICS meetings going on as well. So from an international perspective, there are a lot of important meetings and conferences going on that are where the leaders are pretty much discussing, what's the forecast looking like when it comes to the international economies, but also new plans in general for all the international economies, especially for BRICS and then all the countries that were attending in IMF as well. Continuing down onto Thursday is really when we start to see a little bit more of the red folders coming out, mostly because of the PMI data from the Eurozone, from GBP, from the US as well. And we're starting to see that for the most part in the Eurozone, we're starting to see some contractionary numbers coming out. So anything below 50 for PMI is contractionary for that specific sector. So for example, manufacturing contractionary just means that you're starting to see less orders, less production happening on the manufacturing side, and less sales happening on the services side. And then German, pretty much the same thing. We're sitting in that contractionary and we're sitting at just above that 50 mark. So not 100% into expansionary side just yet for Germany. Continuing down, as we mentioned right now, BRICS Summit was happening. And then you had PMI data coming out from the UK, where you're sitting around that 50 mark, so just above 50 and then right at 50.3. Same thing, you haven't fully transitioned into the expansionary side, which is what you would want in a growth economy. But when you come onto the US side, we start to see some more stronger data points, which leads us into next month of when the Fed is potentially going to give us another rate cut. And now looking at these data points is really how we determine, are we going to see another 50 basis point cut, or is it going to be a 25 basis point cut? We've already seen a 50 points cut, last month in September. So there's a very high chance that we're going to see a 25% or 0.25% cut in the upcoming month, and then pretty much closing out the year with that, instead of coming in too aggressive where the Fed might have to turn around and increase those rates again. But we are starting to see some more stronger data points where you see the unemployment claims are starting to drop down. And then on Friday, we had more of the core retail sales coming out. The consumer sentiment starting to pick up on the US side. Inflation expectations starting to drop down here a little bit as well. You have positive numbers coming out from the core durable good orders, where we're expecting negative orders essentially to come in, but we still have some activity there. So all of these data points on the US side hint towards the fact that we will potentially see the continued of maintaining where the interest rates are, or even a 25 basis point cut. That takes us into next week. So what are we seeing to end off this month going into next week? So starting off Sunday, we have a New Zealand bank holiday, so expecting a slow market right when the market opens up. And then things start to pick up a little bit in New York session on Monday, where you have Bank of Canada's governor speaking. And then as we continue down onto Tuesday, you have the JOLTS job openings coming out. You also have the consumer confidence coming out from the US. I would be paying most attention to the JOLTS job openings, as we're looking at data points that are closer to inflation and employment data as well, since that is what the Fed is looking at to make their determination of whether or not they're going to have the 50 or 25 basis point cuts. And then as we continue down onto Wednesday, you have the ADP non-farm employment change coming out, so another data point to watch out for when it comes to the employment side. And both of these, along with the others that we're going to see right now, sprinkled throughout the week, are going to set you up for potential moves when it comes to NFP on Friday. So right now, usually when you're looking at NFP weeks, right in the beginning of the week, you start to see that the market moves a certain way where you have, cleaner movements happening earlier in the week. As you get closer to the middle of the week or second half of the week, you start to see a little bit more consolidation happening as the investors are anticipating what kind of data point that we're going to see when NFP does come out. And so this is a really good opportunity to start understanding, from a macro perspective, as you're putting together all these different economic data points, where they're hinting towards and what's the bigger picture that they're painting. So look at the JOLTS job openings, look at the ADP non-farm employment change that comes out. Every Thursday, you have the unemployment claims that are coming out. So that's another thing to watch out for. You have the challenger job cuts as well that you can watch out for, which is really going to paint the picture of where we're expecting when NFP comes out on Friday. So those are a few things on the US side, but there are still a lot of other important economic data points like CPI from Australia. So if you're trading the Aussie dollar, that's what you're going to be watching out for. The German prelim CPI. Again, Germany is one of the bigger economies in the Eurozone, so this is a very important data point just to kind of gauge how the Eurozone economy is. And then continuing down onto Wednesday, you have GDP data coming out from the US. And then you also have the pending home sales, crude oil inventories, all that type of stuff that kind of paints the picture for you of how the economic health is at the moment. Continuing into Asian session, you have interest rate news coming out from Bank of Japan. So are we going to see the maintained interest rates, or are we expecting to see another rate hike? So for the last few months, we have finally started to see that there are rate hikes happening in Japan, which has contributed to the strength of the Japanese yen at the moment as well. And for the last few months, we have maintained at that 0.25%. So the sentiment is that we're going to pretty much stay around here. This is what the officials of Bank of Japan have said in the past as well, that they're going to maintain the current policies that they're sitting at, the current rates that they're at, and they're just following the economic data very closely. So as of right now, the sentiment is that they're very comfortable with where they are. But of course, as we're leading up to the monetary policy statement, the policy rate release, the economic outlook report release, all of that, you're going to start to see some more of the news coming out of the different statements that are coming out of Bank of Japan officials as well. So that's another thing that you can watch out for. But for this, the sentiment so far is that we're probably not going to see another rate hike happening just yet. Going to Thursday, I already mentioned the challenger job cuts that you're going to watch out for the US, but you also have the core PCE price index. So that's another thing that the Fed watches out for in terms of inflation. And you pretty much want this to be sitting at low levels, which gives you enough confidence, or even gives the Fed enough confidence to continue with those rate cuts without having to fear about inflation increasing, because inflation and interest rates do have inverse relationships. You have the employment cost index, unemployment claims, again, comes out every Thursday. So that's a very good data point to follow every week. And then finally going into Friday, you have CPI data coming out from Switzerland. And then you also have the average hourly earnings, non-farm, and unemployment rate coming out. And then manufacturing PMI data also coming out from the US. So next week is going to be quite economic data heavy starting Wednesday. So you want to make sure that you're preparing before the market opens up. So either on Mondays or Tuesdays for your potential trade opportunities. I do think historically what we have seen is that for NFP weeks, we get much better movements earlier on in the week. Things start to slow down as we get closer to NFP, as the market starts to anticipate what are we going to see when NFP does come out. So it's kind of just leading into NFP, and then you see some movements, not right when the news comes out. You'll probably see a movement happening on the 30-minute, 15-minute, but better movements happening after the New York Stock Exchange just for a little bit, and then you close out the week. So I am also personally anticipating to look for better movements earlier on the week that I can carry into the second half of the week. That brings us onto the technical side. So as I said, this is the first month of the new quarterly candle that we're coming to an end of. And then going into November, we have a ton of economic data coming out, but also just from a geopolitical side, a ton of stuff happening. So for example, in the US side, if you're trading any USD pairs, if you're trading US30, if you're trading NAS 100, even if you're trading gold, you're going to be watching out for what happens with the November elections, because depending on who takes office, their policies are also going to impact, of course, the economy and the strength of our currency as well. And then we're also leading more into what are the future monetary expectations. So that comes into interest rates. So of course, watching the economic data points with inflation, with employment, and all of that is going to set up, what kind of monetary policies are we expecting? Are we going to see another rate cut happening on the US side? Are we going to maintain those current interest rates that we're sitting at? Those kind of things. Unemployment claims, as we saw, they're dropping. We're starting to see the new home sale increasing. So if you go back to this past week, you'll see that as well. The rising consumer sentiment, positive sentiment, the drop in inflation expectations, all those things are contributing more towards the US dollar strength that we have been seeing for this past quarter. So when you drop down to the monthly, you do see that we have started push up with a lot of volume. So US dollar has gained a lot of strength coming back into this 106 area, which I would be targeting to see, where is the dollar strength headed from there. To break past this, of course, we're going to need, better fundamentals to come out. That could be potentially the elections, who takes office, what kind of policies that they're coming out with, what kind of effect is it going to have on the economy, the data points, and also the interest rates that will be coming out in November. So coming on to the US30 side, this month we had a nice bullish push up here. I'm just going to remove this, and then make this a little bit bigger. There you go. So now we get to see pretty much where price is at the moment relative to what has happened to the left here. We pushed up to the high levels, rejected the all-time high level that price has tapped into for US30. As you can see, it's a level that we haven't reached, as of yet until this past month or this current month. So that's your 43,375 mark. Tapped right into that area, came back down, and then flipped back up or flipped back down bearish here very recently. So what I'm going to do is also mark off a line here, which indicates that going into next week, if price does flip back up above this 42,345 area, we are looking for those bullish push-ups to come back and revisit the previous month top wick, or else we're pushing right back down bearish. Another thing that I want us to note is that every time price has extended out, we do come back to areas of liquidity here. So for example, we had, after price extended out to that bullish momentum here, we did come back and respect into these previous areas of liquidity, that little support area where you see price holding onto a support here, a push back up, and then this candle here. So about 2 months ago, we had a massive liquidity grab, which gave us enough momentum to come back and tap into those all-time high levels that we're sitting at the moment. So what I would want to see if we are going to continue back down bearish is, can price come back down deeper, potentially into this 40,000 mark, so around 41,000 to 40,000 mark here, grab some more liquidity, and then head right back up. I do think we are due, just based off of higher time frame analysis, we're due for a little bit of a corrective move. But like I said, we do have a lot of data points that are coming out next week with NFP. I do think that the dollar is going to continue gaining strength, and these are just simply technical corrective moves simply to come back and grab liquidity. So even on the weekly time frame, when you take a look at this was another area of liquidity. So how do you identify liquidity areas? You look at the volume that follows. So once price broke above this and we kind of rejected this as support, the following week, we were trying to break above this 42,345 area here, closed up bullish. The following candle once again grabs liquidity and pushes back up. That was a lot of volume that we had in 2 weeks to come back and tap into, those all-time high levels. This past week, we did start to see a little bit of a slowdown when it comes to economic data. So you saw a lot of yellow folders, orange folders, until the second half of the week is really when we start to see a little bit more red folders. But we also, from a technical perspective, we're extended out, right? So we're overextended in that bullish run up. We need to come back down, grab some more liquidity. So going into next week, our main attention is going to be whether or not price can come back down into this 41,000, 42,000 mark, grab some more liquidity and push back up. I do think that after we do push below this area, we are going to come back down into this 40,500 to 40,000 4 or 800 mark, somewhere around here essentially, to come back down a little bit deeper, grab some more liquidity, and then continue pushing back up. So 2 scenarios that I'm looking at going into next week is push down a little bit more as we get more economic data points in support of the US dollar strength. Then can we see that continued push up? Or even going into next week, because this is US30, you do have more earnings coming out from companies. Can we see a deeper push down into any of these areas here, essentially to come back and tap into these areas of liquidity and then continue pushing back up. I do think that, again, from a bullish or from a technical perspective, we have been insanely bullish and we just need some corrective moves. So now it depends on how long is this corrective move going to be, but these are two scenarios that we're going to keep an eye out for going into next week. And of course, we're going to manage these levels as we drop down to lower time frames as well, because we want to be looking at the current levels and where is price headed at the moment. Because of course, off of the monthly and weekly levels, you can identify those stronger levels, but price is not going to be headed there until it breaks the current levels that it needs to go through. So for example, the support area. Now, when we drop down to the daily time frame, so going back up to weekly real quick, all we saw was that these little wick rejections, but when you come onto the daily time frame, you start to see consolidation forming here, right? So that's a liquidity area right there. And so there's a very high chance that we might end up consolidating out here just for a few days, even going into NFP before pushing back up. I do think that we still have some overdue US dollar strength that even is going to be spilled over onto the US30 side. And then if price breaks below that, then we're coming back down into these areas here where you had that resistance. And then you also had a resistance here, that little support before we started consolidating. So we have a pretty good range that we can trade. This is simply just going into, the next week or so. And then this is your next scenario here. We're still in a bullish structure. That bullish structure has not broken, even from the higher time frame perspective. This is simply just going to be a test of structure and grab a liquidity and then a continuation. Let's go ahead and move on to GBP JPY. So when you're looking at GBP JPY, what I want you guys to also notice is that the weakening of the yen's strength. So if you're trading Euro JPY, if you're trading GJ, if you're trading USD JPY, all of that, this is pretty much one of the main factors that you're looking at, besides the fact that, we're going to have interest rates news coming out from all three regions in next month. But you are starting to see the yen weakening, which is having an effect on the strength that we have been seeing for GJ, for example. So when we come on to the quarterly time frame, same thing, where price has been holding on to the support area, which was previously a very strong resistance. This is where Brexit was introduced, and we started to see a massive sell-off happening here for the pound, where the pound started to weaken up. We consolidated out here for a little bit, and then 2020 is really, we started to see that push back up happening. Now that same exact area, we're holding on to it as support. Now the next area of interest here is personally going to be, what has price been doing at the current level that it's at, to the left here. So as you can see, a ton of consolidation being formed here. Another area of potential liquidity. How do you know that's liquidity? Last time we revisited that area, we had a massive sell-off, and then we came pretty close to it as well here, holding onto that resistance, those top wick rejections right into that liquidity area right there, and then another sell-off. We came up above this area and we're holding onto it as support right now. So what I would like to see when we drop down to lower time frames is, can price continue breaking past some of these areas here? So this would be the next target, coming back up into these resistance areas here, which is right into that consolidation resistance as well. So this would be more of your longer term trade. So if you're looking for, let's say, a swing trade opportunity or something like that. But you can absolutely drop down to lower time frames and turn your scalps into those swing trades. So we have already established, based off of higher time frames, that this is a very important level that price is sitting at the moment. It had a nice rejection, came back, held on to support, grabbed that liquidity from the previous consolidation here on the monthly time frame, and then the following month as well did the same thing. And this month made a little bit of bottom wick, broke the previous monthly highs, and it continues pushing back up. So now going into next week, what we want to see is, can price continue breaking its own monthly high here and then continue pushing for another 400 pips or so, which is very doable. But again, that's when you're holding onto your trades for a little bit longer time instead of just scalping and day trading it. Now coming onto the weekly time frame, what we are doing is approaching another weekly resistance area right here. So this week we made a top wick, came back down and closed right below it. Next week, can we see price give you a little bit of a bottom wick and then continue breaking past that? But again, you need those economic data points that are really going to support you and get you through that. That 400 pip range, I do think we can cover that in the next about week or 2 weeks or so. But this is where we really need to break past this. If that doesn't happen, can we come right back down into that 191,800 area, which we had marked off based off of the monthly, but also the quarterly level right here, right? So can we come back into the quarterly levels, potentially grab some more liquidity prior to a continuation one direction or another. As you can see though, we are still in that bullish structure, so nothing has really changed here. We're not looking for any longer term sells just yet because we have yet to break that bullish structure. That bullish structure is broken, you know, when price comes back and breaks below these consolidation areas. So around 180 to 184 to 183 area, when price breaks below that, gives you a retest and continues down. That's when we target, you know, those longer term sell opportunities, so swing trades or even longer position trades. Other than that, right now, what we're only focusing on is potential swing trades and also the scalp opportunities or even day trades. So you come onto the daily time frame, and what you start to see is that for the last couple of days, we ended up consolidating out here. When we did push up, we rejected right into that weekly resistance zone that we had marked off. And the last couple of days, we're kind of just hanging around here. So today we did break the highs, we did break the lows, and we're kind of just sitting here in a little bit of an indecision. You drop down to the 4-hour time frame and you start to see a little bit more of that price indecision happening here. Rejection, consolidation, we come back. Are we simply rejecting this as the new resistance and then push back down for a deeper corrective move? If that happens, what you're looking for is sell opportunities to come back down and revisit into these areas. So you have a pretty good range. Let's say the next candle that opens up with the new weekly candle, you have a pretty good range for about 150 pips or so to come back into this area, or you can wait for that consolidation to completely clear out and you still have a pretty good range, and then you come back down deeper into that consolidation area to grab some more liquidity. But even here, when you come onto the intraday time frames, you're still in that bullish structure. So again, nothing has really changed here, and that structure doesn't change. Intraday structure also doesn't change until price clears completely below this consolidation area here. Even then, from 194 to 191,800, you have a very good range to turn your scalps into swing trades. So in either directions, we're pretty much ready for a breakout, and we know how to take those trade opportunities at this point. Let's come on to gold. So gold is very reactive to what has been happening from a geopolitical perspective, the US perspective, and also the economic data points that we have been seeing. And a lot of investors still moving into some of the safe haven currencies and commodities because of, again, whatever's happening in the Middle East and Russia, Ukraine as well. So on the quarterly time frame, we have been seeing that gold has been insanely bullish. We're coming back and tapping into those all-time high levels as we have done in the past here. And right now, we don't have any signs of exhaustion happening on gold with the bullish run up. So really, all we're doing is, from a technical perspective, waiting for some corrective moves and then riding the wave right back up. There's a very high potential that we can even come up into that 3,000 mark, could tap into that, and then potentially see a similar setup like that where you have a top wick rejection and then price just consolidate out here once again. Let's come on to the monthly time frame. So same thing here. On the monthly time frame, we have been insanely bullish, so we're waiting for some sort of a pullback, so essentially like a bearish candle to give us a little bit of corrective move on the intraday time frames, and then a continued push back up for that bullish momentum. So even the last couple of months, as you can see, we have been insanely bullish, not much signs of any exhaustive moves besides this last point here where you had those massive top wick rejections. Price came back, gave you a doji close here, and then continued pushing right back above this. So as of right now, we're just going to continue riding this bullish momentum to the upside. Drop down to the weekly time frame. This is where we're going to start marking up our levels. So coming onto the weekly time frame, we're looking at the levels that price needs to break right now before we can start looking for a trade opportunity. For any sell opportunities, I'm not really entertaining any swing trades unless price can flip back down below this area of 27,21,500. Come back down below that, even give us a corrective move, coming back down into this 26, almost 60 area or so, and then continue right back up. So what we have been seeing is those subtle corrective moves. So you had this consolidation resistance that was right around here. Price gave you a retest here. So you got a break, you got a retest, price continued pushing back up. It gave you another small retest here, continue to bullish momentum, another retest here with that massive bottom wick rejection. and then a push back up. So essentially we're looking for something similar where we're getting a retest of some sort and then continuing back up bullish, targeting that 3,000 mark going into the end of the year. So we have that, and I'm also going to mark off the current weekly high right around here at that 2758.6 mark. So that would be the level for any buy opportunities that I'm looking into for the short term, for any scalp opportunities or even day trade opportunities. And then as price breaks above that, then you just let that trade continue running. Today we did close out with its insanely bullish momentum. As you can see, no top wick whatsoever. You had a bottom wick here with the retest. So I do think that we're going to continue that massive bullish momentum going into next week with a little bit of a bottom wick and then push right back up. As price breaks this current high, I think we have a potential buy opportunity here. So even on the 4-hour time frame, you had that support being formed, a bottom wick, price pushes back up, and then this last 4-hour has been insanely bullish, no bottom wick whatsoever, and then closed out with just a little bit of a top wick. So with the new candle forming, that would be my first target, my partial area, scalp, TP, or day trade, partial area, and then just let the rest of the trade run. What I would want to see if I'm going to entertain any short-term sell opportunities here, though, is price flipping right back down below this 2740 mark, coming right back down into that 2721. We know that that's a very strong level. Just looking at how price has been reactive here, and we're still maintaining that bullish trend. So based off of higher time frames, we don't have any longer term sell opportunities that we're going to entertain for gold just yet. We're just riding the wave until gold exhausts out. And I do think that we're going to continue that run up to that 3,000 mark, given the insane volume that we have been seeing from those higher time frame levels. So with the weekly time frame, that insanely bullish momentum. And we're mimicking what has happened here in the past as well, where gold has been insanely bullish. In 2020, it dipped down here a little bit and then pushed right back up. We came fairly close to that 2,000 mark here with that top wick rejection before a little bit of a corrective move, came back again pretty close to it in 2022 with a top wick rejection at that 2,000 mark and then a corrective move. So that has been a lot of liquidity that the market has generated here. And then we finally saw a breakout happening here with a little bit of consolidation right in the middle to continue that bullish momentum to the upside. So I do think that we have some more bullish momentum to the upside, and we're just going to continue that rally and we're going to ride that wave. Any sell opportunities, we're not really entertaining them until price does break below that zone or even below 2721, and then we can look for more sell opportunities coming back to dip into this consolidation area of around 2680. So that's pretty much it going into next week with the economic data side and some of the key fundamental things to watch out for going into next week. I hope you guys have a great weekend and you guys have a great trading week.